I'm here doing it.
will only spread if we do nothing. Because of this corruption, the
Good evening. We'll start the class, but today I was little late, not because I was late and there were technical issues here. Uh, this is my plan. Now, I have asked my theory students also to join the class today. We are planning to discuss as many past paper questions as possible from the revision kit, from the areas we have covered so far. And finally, we will try to find some extra time to do at least one or two papers in the platform. So without doing at least one paper in the platform, we don't get that experience of, answering the questions in the platform. So that is a must. And you'll have to support me because just 4 hours into 4 will not be enough to do a lot of work and we need to find some extra time. But today I will try to cover first a theory part and then to start discussing questions. What theory part am I to do today? As we discussed last in the previous class, I just thought of discussing the ethics part, and we'll discuss the theory part of ethics, and then we can start discussing the past paper questions. I mean the questions in the revision kit, and then to move on to other areas. So I just shared one document in the two groups, revision group and in the theory group. Just have a look at it, and we'll start with the ethics part, and then we are starting to discuss the questions from ethics. Okay. Now you all can see the screen. Can you all see the screen? Yes. Hurry up. Okay, thank you. Thank you. So professional code of ethics, and this was taken also from ACCA, not from anywhere else. Now all the professions have their own ethics. Even local CA Sri Lanka, they have a separate code of ethics. For SIMA, they have a separate code of ethics, and for ACC, they have a separate code of ethics. And this was taken from ACCA, so this is very much relevant for y'all. Okay, right. let's just go through the content here. Professional codes of ethics are issued by most professional bodies. The CA code was received and reissued in 2020. The main reason for professional codes of ethics is to ensure that member students observe proper standards of professional conduct. Members and students will therefore refrain from misconduct and not make any serious departure from the ethical code. If the standards are not observed, then disciplinary actions may be taken. Maintenance of a professional code of ethics helps the accountancy professions to act in the public interest by providing appropriate regulations for members. Now we know different professions are there and you can do a job. So how do we differentiate a job from a profession? So there will be some set of rules to be followed in every profession. You know, doctors have their own code of ethics and they can't advertise themselves. So can they advertise themselves? Can they say that so and so is the best doctor for heart surgery? No. So can they say that anyone who undergoes a heart surgery from me will get the best results? I'll make sure that your lifetime is extended by 10 years. Can I say that your extension of lifetime will be guaranteed if you get the heart surgery done from me? You can't do that. Advertising is not permitted. Now, even in Sri Lanka, for CS, chartered accountants in Sri Lanka, local chartered accountants, as part of their codes, they can't advertise themselves. They can't say that we are the best auditors and we are giving the best opinion. No matter how dirty your financial statements, but we still remain committed to give the best opinion. And ours is the lowest price, lowest charge. So they can't advertise themselves. So likewise, you need to hold on to the highest standard of ethics, highest standard of conduct of your business activities, or in your whatever the role you play in your conduct, you must hold on to the highest level of standards, highest level of standards. So we need to come to the point straight without beating about the bush. In our discussions of ethics, we need to discuss only just 3 aspects. We only discuss 3 aspects in our discussions of ethics. What are these 3 aspects? You need to discuss the type of ethics we need to follow. You need to discuss the type of ethics we need to follow. And there will be threat to ethical principles. We'll discuss one by one. We'll first explain what the threats are, and then we'll start discussing them one by one. So we need to first discuss the ethical principles, and then we'll discuss the threats to ethics. And then we need to discuss the remedies to the threats. So that's what we need to discuss. And the questions, no matter how big the questions are, and all the questions are from only these 3 areas. Either the questions are given from ethical principles, or the questions are given from the threats, or the questions may be set from the remedies available. So this is not hard, and this is not a complicated area. So we can finish it soon and then start discussing the questions. Okay, right. Contents of a professional code of ethics. The following are usually included. Introduction provides the background to the code, stating who it affects, how the code is enforced, and outlines disciplinary procedures. Fundamental principles, the key principles that must be followed by all member students of the association. The principles may be stated in summary format. Conceptual framework explains how the principles are actually applied, recognizing that the principles cannot cover all situations, and so the spirit of the principles must be complied with. Detailed applications, examples of how the principles are applied in specific situations. Okay, just forget all of them and we will start discussing one by one. Okay. So we are coming to the most important part, principles. So there are 5 ethical principles which the students as well as the members are required to follow. So what are these 5 ethical principles? We'll take one by one. Integrity, objectivity, professional competence, confidentiality, and professional behavior. Okay. Now, the simple and concise, brief explanations are given. So this document explains what integrity means. The document explains what objectivity means, what competence means, and what confidentiality means, and what professional behavior should be. Integrity means honesty. That is the simplest available explanation that anybody can ever give for integrity. You must be honest. Being honest means what? Being honest indicates the fact that you must be fair in all your business dealings. You must be fair in all your dealings. No matter what, it can be accounting, it can be financial reporting, it can be business, and you must be fair. You must be fair in all your dealings. So we can give as many examples as you need to explain the integrity. We can call it probity sometimes, we can call it honesty sometimes, or we can call it integrity. Okay, let it to be integrity, let it to be probity, let it to be what? Honesty. What does it mean? This means that you need to be fair in all your dealings. Now we'll take as many examples as you think is necessary to explain the concept of integrity. Okay, right. Now you are working as an accountant. You are working as an accountant of a company, or you are the head in the finance department. You have been promised a bonus payment which is based on the profit in the profit and loss. It is a performance-based bonus payment, performance-based bonus payment. Performance-based bonus payment. Your profit, that is what you can see from the profit and loss, and your bonus will be based on the profit in the profit and loss. So you being the accountant, you need to make a self-assessment as to how fair you are in preparing the profit and loss. You have a self-interest. You love yourself and you want your bonus to be high. For you to make your bonus high, for you to have a higher bonus, what will you do? You need to increase the profit in the profit and loss. The higher the profit figure in the profit and loss, the bigger the bonus figure. So you will try sometimes the advance payments we collected from the customers cannot be taken into revenue under IFRS 15. You must recognize them into contract liability. But then you will be tempted to recognize the advance payments you collected from the customers into revenue even without the goods being delivered. You will be tempted to recognize that into revenue. Why? Because the higher the profit figure in the profit and loss, and the higher the profit figure in the profit and loss, the higher the bonus figure. Are you fair in your dealings? You are not. Why? You manipulate the profit and loss. Why do you manipulate profit and loss? To report a higher profit. So why do you report a higher profit? To have a bonus figure. Are you straightforward? Are you straightforward? No. You are not straightforward. Are you fair in your all dealings? You are not fair in all your dealings. But if you just think for yourself, I don't care. No matter what my bonus is, I will strictly stick to the principles of accounting. I will strictly follow the accounting standard requirements. The advance payments I collected from the customers will be taken to contract liability without it being taken to profit and loss, without it being taken to revenue. Then you are fair. Then you are straightforward. So being honest means what? You are straightforward. you are, you know, you have been fair in all dealings. You have been fair in all dealings. Okay, ne? Right. Another example, say you are the accountant in the company. Also, you are trading shares. Are they clear? Before that, please, can I have a small feedback from you all? Basit, Chatura, Dilruk, Lasari. Shihana. Okay. Is there anyone who does not come to my theory class here? Is there anyone who doesn't come to my theory class? Basit, are you in my theory class? Chatura is there in my theory class. Dilruk, are you in my theory class? Lasari is there. Dilruk. Okay. Where have you gone classes for? Basit, Sayafsian, where were the previous classes? Okay, Basit says self-study, fine, okay. Right, now we'll discuss. Right, fine. Now, you are working as the accountant of a company, and this company where you work as the accountant is a listed company. Listed company. And also you trade in the share market. You trade in the share market. You have acquired a sizable number of shares of the company that you work for. You already have acquired some shares of the company that you work for. And you are planning to sell them quickly. You are planning to sell them shortly. But for you to sell, the price in the market must be an attractive price. I mean, for you to make a profit, the price at which you sell the shares must be higher than the price at which you purchase the shares. If not, there is no point, there is no use in you selling the shares. What you do is to try to push push the market price up. What you will do is you will try to manipulate the financial statements to increase the profits and then to increase EPS. You try to do as much adjustments as possible to increase the profit, to increase EPS, so that profits will be manipulated, EPS will be manipulated, everything will be manipulated, share price will increase, and then you will sell the shares and make money. Have you been fair in your dealings? Have you been straightforward? You have not been fair in your dealings and you have not been straightforward either. And if you think for yourselves, let my profit to be anything, I will damn care about it. I will not damn care about it. I don't mind suffering a loss, but I will be straightforward. I will be fair in my dealings. Okay. And I will stick to the principles of accounting standards. I will strictly follow principles in accounting standards. I will follow accounting standards. I will hold myself to the highest possible standards of ethics. I will not breach the quality of integrity. I will not breach the quality of honesty. So I will let my profit to be anything, that's all right. I don't mind suffering losses, but I want to be genuine. Then you are straightforward. Then you are genuine. Then you have been fair in your dealings. So that is what you mean by what? Honesty or integrity. What do you mean by integrity? Being fair and being straightforward in your dealings. Being fair in your dealings and being straightforward in your dealings. That is integrity, that is probity, and that is honesty. Okay. We'll take another example. I'll give you so many examples to remember. You are an ACCA qualified accountant and working as the manager or the partner of an accounting firm. And you are supposed to do the audit of a client. And the client has given you a substantial amount of a gift. It can be a branded vehicle. And the client, he himself knows that the financial statements are all rubbish. A clear opinion cannot be given. And then the client, by giving the vehicle to you, is trying to bribe you. Okay, he is trying to intimidate you. And then you get caught and you swallow the bait. And then you decided to give a clear opinion saying that the financial statements reflect the true and fair view, whereas the financial statements are all rubbish and dirt. It's like a dustbin. And you have not been fair. You have not been straightforward. You got caught by ransoms, you got caught by bribes, and that was a vehicle of a significant amount. It was a vehicle of a significant amount. You are not being honest. Okay, you betrayed your quality of being honest for a bribe. You betrayed your quality of being honest for a ransom. You betrayed your quality of being honest for a vehicle. You are not being straightforward. But if you speak to the clients and say, look here, no matter how expensive the vehicle you gifted me, I will not change my audit opinion. Audit opinion is what a qualified. Okay, it's not a qualified opinion. Okay, so now it was a clear opinion. It was a clear, straightforward opinion. And this is because you did not get caught by the ransoms. You did not get caught by the bribe, and you did not get caught by the gift given by the clients. But if you decided to change your opinion, if you decided to give a clear opinion, despite of all the rubbish in the financial statements, despite of all nonsense in the financial statements, you gave and issued a clear opinion, then you have not been honest. You have not been honest. Okay, right. Another example, you have a big client. You are working as the partner of an audit firm, accounting firm, and you are doing the audit now. You are doing the audit. And this client has got into some financial difficulties. So the audit bills have got accumulated for a couple of, you have not got the payment from the clients for many years. And it has totaled up to, a big amount of like couple of millions. So the client says they have already applied for a bank loan from which they are planning to pay our bills. And to get the bank loan, you must give a clear audit opinion to the bank. I mean, you must give an audit report to the bank with a clear opinion. If the opinion will not be a perfect opinion, a clear opinion, okay, then the bank will not release the bank loan and you will not be able to recover your outstanding bills from your client. So now you are between the devil and the deep blue sea. You are in two extremes. You can't give a clear opinion why the financial statements are all rubbish. If you do not do that, you will not be able to impress the bank and the bank will not be releasing the bank loan. So then, just for the sake of recovering your outstanding bills from the client, you thought of issuing a clear audit opinion. Have you been fair in your dealings? Have you been honest? Have you been straightforward? And if you think for yourself and you will speak to the client, look here. So don't try to, be dirt, because you are under the obligations to settle my bills, and that has got nothing to do with, the bank loan. And whatever it is, I will not betray my standard of ethics. I will not betray my quality of being honest, and I will not issue a clear audit opinion, and I will, do whatever that is necessary. So please don't expect me to do that. And you have to pay my bills, and that should not depend on the bank loan. That should not depend on the bank loan. So then you are straightforward. Then you are have been fair in all your dealings, and then only you safeguard, you preserve, you keep the principle of being honest. You keep the principle of being honest. Okay, so there are a lot of examples. Are the examples enough? Are the examples enough? If you want, I can give you some more examples. Yes. Hello. Okay. So, in short, if someone requires you to explain the concept of integrity, so how will you explain the concept of integrity? So integrity is nothing but being straightforward in your dealings. Integrity is nothing but being fair in all your dealings. Okay. And being straightforward and being fair in all your dealings is called integrity. That is what is meant by integrity. We are moving on objectivity. Members do not allow bias or conflict of interest in business judgments. Members do not allow bias or conflict of interest in business judgments. In other words, you should not compromise your independence. You should not compromise your professional judgments for biasness. And that is how you will define the concept of objectivity. Now you need to remember those keywords when you answer the questions. If the examiner requires you to explain the concept of these fundamental principles, and you need to use these keywords, and that's what the marks are allocated for. So what keywords that are needed to be included in defining integrity? Integrity is being fair in all dealings and being straightforward in your dealings. And objectivity is what? That is not compromising your professional judgment for biasness. And let me take some examples, please. Now this company, will call it APLC. They have investments in equity shares of companies. Equity shares of companies, and that's a sizable amount of 100 million. It's not for trading purpose. These are not for trading purpose. Now, since we have completed IS 32 and IFRS 9, can somebody tell me these 100 million worth of shares need to be classified under which category of IFRS 9? Which category of financial assets of IFRS 9 should this investment come under? Hurry up quickly. It has to come under which category of financial assets of IFRS 9? Come on. It has to come under fair value through OCI. Fair value through OCI. Right. Now, initial measurement was 100. Initial measurement of investment was 100 million. And subsequent measurement, I mean reporting date value. Reporting date value is 120 million. Okay. Now this change in the fair value of 20 million should go where to OCI. It doesn't get included into the current year's profit. It's a separate equity figure. Now, even the CEO, the managing director of the company, is an ACCA qualified accountant. And the CFO is also an ACCA qualified accountant. The CEO or the managing director is now calling the CFO and he's asking about the investment. And he says, I have promised 100 million net profit to my shareholders last year. And I'm short of 20 million profit. It's only just 80 million net profit for the current year. I'm short of another 20. I'm falling behind by 20 million. And why can't you reclassify that investment from fair value through OCI? Why can't you reclassify the investment from fair value through OCI to fair value through profit and loss? Why? So that fair value changes can be directly recognized to profit and loss, not to OCI, so that I can increase my current year profit by 20 million. Then I will become popular with the shareholders. I will look after you, the CFO. I know your salary is only just 1 million for a couple of years. I can take care of it by next year. I'll make it 2 million, nothing to worry. I know your vehicle is a bit of an old one. We will buy you a better Mercedes. And please do it so that all of us will be popular and we will get appreciated in front of shareholders. If not, he will be little heavy on him. He might say by intimidating. I know a lot of weaknesses in your job. I have given you a couple of warnings. And you can't do what you want. You can't do whatever whatever you want to do, you can't do it and you need to listen to me. I'm your boss. And if you can't listen to me, you need to bugger off. I will find someone else for you. So he's now coming a little heavy on the CFO. He's trying bit, intimidating and forcing the CFO to change the classification from fair value through OCI to fair value through profit and loss. And if the CFO will listen to managing director and decide to reclassify the investment from fair value through OCI to fair value through profit and loss, he is compromising his professional judgment for biasness. He is biased to the managing director. He is biased to the managing director. He is compromising his professional judgment. What is his professional judgment? It has not to come under fair value through profit and loss. It has to come under fair value through OCI. But he compromises his judgment for what? For the biasness. And then there is a clear breach of what? Clear breach of objectivity. Clear breach of objectivity. Clear breach of objectivity. Okay. He's working not based on how the accounting standards want him to work. And he is not following the requirements of IFRS. He does not stick to the principles of IFRS. And he sticks to the instructions given by the managing director. The managing director doesn't care about financial reporting standards. And he wants to be popular with the shareholders, and that is what he does everything for. So if the CFO will decide to change the classification from fair value through OCI to fair value through profit and loss so that they can recognize fair value changes to profit and loss. So what is happening is a clear breach of objectivity, and he is compromising his professional judgment for the biasness. Is it clear? Is it clear? Is it clear? Okay. We'll take some more examples. Now, say there's a gentleman and he's working as the partner of an audit firm. We'll call him Silva. Silva is an ACCA qualified accountant and he's the manager or the partner of an audit firm. Partner. And there is a company called PPLC, and that is where his wife works. Wife works as the CFO. As a CFO. So Silva is auditing the financial statements prepared by the wife. Prepared by the wife. Now all the financial statements are dirt. All rubbish. There's nothing inside. A lot of errors and mistakes are there. They are not faithfully represented. So Mr. Silva is now sending his team to start up the audit. And these juniors and the managers will start questioning Mrs. Silva, asking that information, asking that reconciliation. And it's going to be hell of a hassle for Mrs. Silva. So Mrs. Silva is putting the pressure on Silva, saying that idiot, now ask these people not to do that. There are so many other areas to be looked into. And these people are making a big fuss here. Ask them to, shut their mouth and, they have a lot of other work to do. Without just making a fuss. Okay, without just making a fuss, they can, question about other areas without questioning about the areas where there are problems. So wife is putting the pressure on husband. Husband is doing the audit. So husband will instruct his juniors and the subordinates not to make it like an investigative kind of an audit and to do just a small sample check and then to, issue the audit report. The financial statements are not properly prepared. Financial statements are not faithfully represented. And she has not followed accounting standards at all in preparing financial statements. So clear report cannot be given. That is the professional judgment. Professional judgment is that you can't give a clear opinion, but just because of the biasness, he has given a clear opinion. So what has happened now? Clear breach of objectivity. Why? Silva is compromising his professional judgment for biasness. What is the biasness? He is biased by the relationship. Okay? He is biased by the relationship. So he is now compromising the professional judgment for the biasness. What is of a clear breach? Objectivity is a clear breach. What do you mean by objectivity? Objectivity is where you compromise your professional judgment for the biasness. Okay, next, right. We'll take another example. say, once again, you work as the accountant or CFO of a company, you are an ACCA qualified accountant. And you work for company APLC, 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 APLC. And CFO's wife is working as a consultant of another company, we'll call it BPLC. BPLC. Okay. Now, BPLC will be doing some work for APLC, and it has to be evaluated by the CFO. And following to the evaluations of CFO, only the payment has to be made from A to B. So get my point clear. CFO is working as the CFO, as CFO of APLC, and his wife is working as a consultant, or wife can be, part of the management of BPLC. BPLC will be providing some services for APLC, and that service is not up to the standard. Then APLC will refuse to make the payment for BPLC because they have not done the service properly. Now, through the wife of the CFO, BPLC will try to get the payment out from APLC through the relationship between the CFO and the wife. And CFO knows that the service which they received from BPLC is not up to the standard. But due to the relationship, due to the pressure put on CFO by the wife, and CFO will decide to release the payment to BPLC, though the report is not the best, though the report includes so many mistakes, though the service they received from BPLC is not the best service, though it is not the standard service. Now, what is it? Due to the biasness, you compromise the professional judgment. Due to biasness, you will, compromise the professional judgment, and that is what a clear breach of clear violation of objectivity. Clear violation of objectivity. Then you are the CFO, and the managing director of the company has given you some bills, and these are his personal expenses. The managing director requires you to, he is asking you to recognize the bills as company marketing expenses. And you know for sure, these has got nothing to do with the company. And he has spent on his personal matters. Now, he requires it to be recognized as company expenses. The managing director says, I will look after you. I will take care of you. Nothing to worry. I will promote you to the finance director's positions in the next year. And you need to follow my instructions. That is the main thing. If you follow my instructions, and the sky is the limit, you will get anything you aspire for. But you need to follow my instructions. So the managing director is asking to take some personal expenses of his own as expenses of the company. If the CFO will decide to, he knows, as per the conceptual framework, definitions of conceptual framework, that cannot be an expenditure in the company. It has not to be a company expenditure. It has to be a recovery from the managing director. But knowing that very well, CFO will decide to recognize that as company expenses. So what is of a clear breach? Objectivity is of a clear breach. He's compromising his professional judgment for the biasness. He's compromising the professional judgment for biasness. Okay. Right. So we will move on. Next one, competency. What do you mean by competency? What is competency? Can somebody help me out, please? What is meant by competency? What is competency? Yes. Yeah, you must possess the required skills and technical knowledge at the required level. You must have the required technical knowledge and the skills at the required, uh, you must be at the CFO level, you must be at the finance director level, you must be at the managing director level, and you must have the technical knowledge, skills required at that positions, required at that level. So we'll take examples. Now you are working as the partner of an audit firm. So another client of you wants you to take over a massive tax assignment. A massive tax assignment. And that's all about implementation of newly introduced taxations within the jurisdiction. And you have not updated yourself for many years since you completed doing exams. You completed doing exams maybe 30, 40 years back. And since then, you never even read an article on taxation. And are you competent enough to take over this assignment? Yes or no? You are not competent enough in taking over this assignment. Okay, you are not competent enough. So knowing very well you are not competent enough in doing this assignment, you take it over. One thing, there are couple of violations. What are those? One thing, you have not been honest. Why? You took it over just because there was a massive fee. You can charge a lot. The fee is a big fee. The fee is a high fee. You can charge a higher fee. And that is what that inspired you to take over the assignment, knowing very well you are not competent enough to take it over. You took it over from the customer. One thing, you have not been straightforward. You are not being fair in your dealings, knowing very well you took it over. So there's a violation of integrity. The other one is what, being a member of ACCA, you can just sit for the exams and finish it and then forget everything. And you need to have continuous development. Okay. Continuous development in your profession. Continuous development of your profession. You need to keep yourself updated. You need to read. You need to, be on top of the changes, and you should not let yourself to be obsolete in terms of knowledge. So that is what you mean by competency. Then you are running an audit firm and you are the partner there. One of your client requires you to take over business valuation assignment. You only heard of business valuation. You did it about 30, 40 years back for your exams. And since you stopped doing exams after being qualified, you never did business valuation. You never did share valuations. So how can you do that assignments without you knowing the subjects proper? So without you knowing the subjects right, how can you do the assignment? You can't do it. You are not competent enough to take over that assignment. There are two violations. What are the two violations? One thing is you have not been fair. You have not been straightforward in your dealings. And the second is what? Second is where you are not competent enough in doing that assignments. You don't have that skill. You don't have that skill. You don't have the technical knowledge. You don't have the technical knowledge. Okay, right. It does not only mean that you must have only the technical, you must have the skills. What are the skills? Communication skills. And you can't talk properly. You can't do the presentation. You talk, the other people can't hear properly. Why? It was so, the tone is very low. And you explain the financial statements to the shareholders and to the other directors, and it was very confusing. You don't have that presentation skills. Your communications is not so effective. And then again, it's not only about the technical matters and technical subjects. Also, it is about being good at your skills, you developing your skills, your communication skills, your presentation skills, your skills to interact with the people. Okay. And you don't have the team spirit. You can't work with other people. You don't tie up with other people. So you are like a red rag to the bull. Others do not like, you don't get on with other people. So that is once again a skill. You don't have the skill. You are not popular with the others. Then it's not only about the technical matters and technical knowledge, also about the skills. Also about the skills. So as a result, if you do not keep, sometimes being able to work with a computer can be a skill. Being able to talk different languages can be a skill. Being able to be patient sometimes may be a skill. Being able to convince something to someone can be a skill. Being able to present something to an audience can be a skill. Being able to interact with the people can be a skill. Being able to have this endurance can be a skill. So you need to have those skills as well, apart from you being good in your technical knowledge in the subjects. Okay, right. Are they clear? Are they clear? Okay. Right. Then we are moving on to the next one, confidentiality. What do you mean by confidentiality, please? Can somebody help me out? What is confidentiality? What is confidentiality? Yes. What is it? Confidentiality. Not disclosing sensitive information unless it's illegal. Others? Others? What is confidentiality? Yeah, now you gain the access to some sensitive information for being the accountant, for being the CFO, for being the partner of an audit firm. And you must not exploit it for your own benefit. You must not disclose that information unless you are permitted to do that, unless it is required otherwise. And you must not exploit and misuse of that information for your own benefit. You must not make use of them in your favor. Okay, and that is what you mean by confidentiality. You need to divulge and disclose that information to other parties Only where you are permitted to do that. Okay, you should not share that information with parties outside the company unless you are required to do so, unless you are legally permitted to do so. So the information to which you have gained the access for being the accountant or the CFO or the partner of the audit firm should not be disclosed, should not be shared with anyone else unless you are supposed to do, unless you are permitted to do so. So that's what you mean by confidentiality. So I'll take some information. I'll take some examples. Now, say we'll take company A, and you are working as the CFO, working as the CFO. Of the company. You are working as the CFO of the company. And now a meeting is going on where you are taking part. You are attending to the meeting, and what are they talking about at the meeting? The company is now planning to go for a right issue immediately, and that is what the meeting has been for. The company is planning to go for a right issue immediately, and they are going to announce it in just 2-3 days' time. Now, this CFO of the company is also running another stockbrokering company. And you are running a stockbrokering company with another partner. And you know, soon after the announcement of the right issue, market price of a share will start skyrocketing. It will excessively increase soon after the announcement of the right issue. Now the market price of a share is $10 and you expect the market price to be at least $100 soon after the announcement of the right issue. So the CFO, he has collected some important information about the company. He is now leaving the meeting, he is excusing and leaving the meeting, and he immediately called his friend. Please keep the shares of our company purchased. Buy as much as you can. And buy as many shares as you can of our company and keep it now $10. I'm sure it will go beyond 100. Just imagine how big the profits can be. So this man, the CFO, is now divulging some important information. He's sharing some important information with his friend. So he, the friend who is working, running the stockbrokering company, will purchase as many shares as possible of company where the CFO is working now. We'll call it company A. Now, the friend who is running the stockbrokering company with the CFO buys as many shares as possible of company A. Why? The bigger the number of shares we are holding on to, the bigger the profit we can make. The bigger the number of shares we can hold, bigger the amount of profit after the announcement of the right issue. Why? You will get the benefit only after selling the shares after the right issue. So what was it? And what was it? It was a breach of what quality, what ethical principle? What is it of a breach? What is it of a breach? It is a breach of what? It is a breach of confidentiality. Confidential. I'll take one more example. Okay. So there is company A and there is company B. Company B. And there's CFO. He is an ACCA qualified accountant. And there's a CFO, and he's also an ACCA qualified accountant. Company B is into mining business. And company A is issuing license for mining. I mean, they need to take the license for each mine. They must have 100 mines and they must take 100 license separately. Okay. Company B has acquired a massive mine, and that is a heavy investment, massive investment. So company B has applied for the mining license from company A. I mean, not that company A gives the license, that will be given by the government, but company A has to give some geological reports. And company A has to give some recommendations. Company has to give some, kinds of geological reports, certifying that company B is eligible to receive the mining license. And they have done the surveys, company A has done the surveys, and company A realizes that they cannot get the mining license. Why? They have not fulfilled the requirements. Now, once it fails, you can't reapply for the mining license. So the CFO of company A will be informing that to the CFO of company B. Why? Because CFO of company B is now holding some shares of its own company. Holding shares. Company B shares. CFO of company B is now holding shares of company B. If the mining license for the new mine cannot be issued, cannot be taken, the market price of a share of company B will fall. Market price of a share of company B will fall. So CFO of company B will suffer a loss. Why? If the market price per share falls, he has to sell them at a lower price and then he suffers a loss. By the CFO of company A sharing that information with the CFO of company B, what has the CFO of company A breached of? He has breached the ethical principle of confidentiality. He has breached the ethical principle of confidentiality. Okay. Is it clear? Is it clear? Yes. Was it clear? Hurry up. Are you all there? Okay. Then we are moving on. Professional behavior is another important ethical principle. What does it mean? Professional behavior means members must comply with relevant laws and avoid actions discrediting their profession. Okay. Members must comply with relevant laws. Relevant laws. Okay. Relevant laws. And must avoid actions discrediting the profession. If you do not comply with the existing law of the country, what is it of a breach? It's a breach of what? Professional behavior. Now, you are an ACCA qualified accountant and you are supposed to file your tax returns on a specific date. We have not done it. So you are discrediting the profession. Why? Everybody gets to know that you haven't done it. Okay. You being a member of CA Sri Lanka, not complying with the requirements, not complying with the existing law, indicates the fact that you circumvent, you ignore the existing law, and then that will discredit to the entire profession. So everybody will think that ACC accountants are so adamant and they are having this egoistic arrogance and they do not want to comply with the existing law in the country. So they break the law, they violate the law. So nobody wants to have ACC qualified accountants as the accountants in their company. Nobody wants ACC accountants to take big positions in companies. Why? You do not comply with the existing law in the country. So that's bad. That's bad. And there are some regulatory requirements to be complied with. Say for an example, in Sri Lanka, there will be local requirements where you are supposed to remit your EPF and ETF on or before a prescribed date, predetermined date. You have never done it on time. Always your remittances of EPF and EPF have been late. So there will be a lot of penalty payments. And you are not remitted EPF and ETF money for many years. Then you are discrediting the profession. Why? You are not complying with the existing law in the country. And as a practice, you have been into this practice for many years. You are an export company and you invoice your goods to foreign customers in foreign currencies. What you do is you always raise 2 copies of invoices. You send one invoice to the customer asking the customer to remit that amount of money to a separate account in an overseas country. And you send another invoice to the customer asking that amount to be remitted to Sri Lanka. What are you doing? You are violating Exchange Act. You are violating Exchange Law. And you are supposed to bring all your foreign income here. But you do not. You dilute part of your foreign income to another country and you understate your income here. You not only violate exchange law, also you violate the income tax law. Why? You are not reporting your total revenue in your profit and loss. So that will discredit to the profession. That will discredit the profession. You not complying with the existing law in the country will discredit the profession. Okay, and ACC accountant should not do that. And an ACC qualified accountant should not do that. So you must comply with the existing law and you must avoid from the actions that will discredit the profession. And that is what is meant by the professional behavior. So if you are supposed to briefly explain these ethical principles, fundamental ethical principles, and you must do it. And there are some keywords to be included in the definition, starting with integrity before we move on. So what is meant by integrity? Integrity is being honest. Integrity is being fair in your dealings. Integrity is being straightforward. Objectivity means what? You're not compromising your professional judgment for the biasness. Competence means what? You need to possess the required technical knowledge and skills at the required level. Confidentiality means what? The sensitive information to which you have gained access for being the CFO or the partner of an audit firm should not be shared or divulged with other parties unless you are legally permitted to do that. Professional behavior means what? You must always comply with the existing law in the country and avoid from actions that will discredit the profession. Say for an example, you are a drunkard and you drive after using alcohol. You're violating the law in the country. You're violating the law in the country. You are running a factory in the urban area and you are supposed to take a license from urban council. You have never taken the license from the urban council, but you still run the factory in the city. You are violating the existing law, and you are supposed to get the emission test certificates for all the vehicles. You have a vehicles fleet of more than 200. For none of the vehicles you have ever taken the emission test certificates. You do not comply with the existing law in the country. Okay, right. Are they clear? Are they clear? Are they okay? Yes. Is it all right if I take just 5 minutes break and continue, please? Is it okay? Just 5 minutes break and then to continue. Okay, please, we'll have a small break, just 5 minutes break and then to continue. Right, we'll continue. Okay. Are you all there? Are you all there? Okay, thank you. Here, the explanations are given for fundamental ethical principles. I'll just read it for you all. You know what it is now. Integrity implies fair dealings and truthfulness. Members are also required not to be associated with any form of communications or report where the information is considered to be materially false or to contain misleading statements, provided recklessly, incomplete, such that the report or communication becomes misleading by this omission. Objectivity. Accountants need to ensure that their business professional judgment is not compromised because of bias or conflict of interest. Professional competence and due care. There are two main considerations under this heading. Accountants are required to have the necessary professional knowledge and skills to carry out work for clients. Accountants must follow applicable technical and professional standards when providing professional services, and that's what due care means. I did not explain that part and will please add it. Accountants are required to follow applicable technical and professional standards when providing professional services. Now, what do you mean by technical standards? Technical standards can be accounting standards. You must have some other standards. Now, say for an example, local standards can be there. It can be ISO. It can be sometimes, it's not straight away from your professional body where you are a member, but still you need to follow those standards. And you must have your own set of standards. You are a charismatic personality. You are always on time on your job. You will never be late. That is another professional standard. And you have always done some little work extra by working extra mile. You get 100,000 payment, but you do a work which is worth 120,000. That is another professional standard. And you're not criticizing others behind their back can be another professional standard. You're not talking negative about others can be another professional standard. Some people do that. Okay. You're not asking some stupid questions from others. Whether you are married, why don't you have babies? And those are stupid questions you should never ask from anyone. Not asking those stupid questions from someone is also what a professional standard. Why don't you get married? That is none of my business. You should never ask that question. Why don't you have babies? Come on, stupid questions. How stupid is it? And sometimes you do in offices. Don't do that. And by not asking those stupid questions, you are demonstrating your professional standards, not technical, but professional. Some people, never listen to other stories. That's none of my business. What is it for me? And they are what? Professional standards. And some people, as a habit, never talk about others behind their back. And some people, if they can't talk positive about others, they just keep quiet and silent. Those are what? Professional standards. Okay, you need to add it to the entire list: professional competence and due care. Confidentiality, the information to which we gain the access for being the accountant or the CFO should not be sensitive information to which we gain the access for being the CFO, for being the accountant, should not be disclosed unless otherwise it is legally permitted. Okay. Professional behavior, you must comply with all relevant laws, all relevant laws, and you must avoid always from acts which will discredit the professions. Okay, right. And we'll go to a small questions. I want all of you all to answer this question. If you can see my document, it was already shared. We'll go to question number 2. Test your understanding. Explain why each of the following actions appears to be in conflict with fundamental ethical principles. An advertisement for a firm of accountants states that their audit services are cheaper and more comprehensive than rival firm. An accountant prepares a set of accounts prior to undertaking the audit of those accounts. An accountant prepares a set of accounts prior to undertaking the audit of those accounts. A director discusses an impending share issue with colleagues at a golf club dinner. The finance director attempts to complete the company's taxation computations following the acquisition of some foreign subsidiaries. A financial accountant confirms that the report on his company is correct, even though the report omits to mention some important liabilities. Explain why each of the following actions appear to be in conflict with fundamental ethical principles. Can I see the answers from all of you all, please? at least tell me the name of the principal which is of a breach. I'm just waiting for the answers. Your answers can be wrong, nothing to worry. Answers can be wrong, nothing to worry, please. Hello. Asari has given the answer: professional behavior, objectivity, confidentiality, objectivity, integrity, and competence. Okay. Others, just only the name of the fundamental principle is enough. Ethical principle is enough. So I will do the explanation part of it, and you just indicate the ethical principle which is of a breach. Which is of a breach. Nabil, Nazik, Priyankar, Safia, Shihana. Okay, we'll discuss. An advertisement for a firm of accountants states that their audit services are cheaper and more comprehensive than a rival firm. Is it about being honest? No. It is about compromising your professional judgment for biasness? No. Is it about you disclosing some sensitive information to outside parties for your own benefit? No. Is it about you violating law in the country and do something which will discredit the profession? No. What is it? It is your, professional behavior and due care. What do you mean by due care? And you must hold on to your own standards of behavior. Now, a firm of accountants in the advertisements trying to say that their services are cheaper and more comprehensive. So what does it try to communicate? What does it try to imply? It implies that the fees that the rival companies are charging are excessively exorbitant and expensive, and that is unfair. You tries to let the clients to know that the fees that the rival companies are charging are excessively exorbitant and expensive and unfair. And also you try to imply that your services are comprehensive and standard, and the services provided by the other firms are not standard. They are not up to the standard. They are not standardized. Okay, you try to imply and indicate that the services provided by the other people are not up to the standard, and only we are providing the services that are up to the standard. So what is it? It's a complete violation of due care. You're not following professional standards. You need to maintain professional standards. You should not criticize the work done by other party. You should not criticize anyone else behind their back. Okay? So you are not holding on to your highest standards on your own. You must hold on to highest standards on your own. Highest ethics and standards on your own. And you must have your own disciplines of not talking about others in behind their back. And you must have your own standards and disciplines of not criticizing anyone else's work. You must have the standards and the disciplines of not commenting on someone else's affairs. So what is it? Professional behavior and due care. It's not part of behavior, but it's part of due care. Is it clear? Is it clear? So Lasari's first answer is correct. Lasar is good. Okay. Second one, an accountant prepares a set of accounts prior to undertaking the audit of those accounts. If the second answer is correct, objectivity. Why? I myself prepared the accounts prior to the commencement of the audit. I myself prepared the financial statements prior to the commencement of the audit. Now, in the process of the audit, if you detect some mistakes, you will decide to, ignore that mistake. You know for sure during the process of the audit, you know for sure that there are some mistakes in preparing financial statement. You will just ignore them and disregard. Why? Because of the biasness. Because of the biasness. So you will change your opinion. The financial statements, though it was prepared by you, they look like dirt. It looks like a dustbin. There's rubbish. There's trash in your financial statements. You can't give a proper opinion, but you will. That is your opinion. That is your professional judgment. Financial statements not reflecting a true and fair view is your professional judgment, but you being the auditor will issue a clear opinion. Why? You compromise your professional judgment due to your own biasness. You bias, to your own biasness. Okay. Third one, a director discusses an impending share issue with colleagues at a golf club dinner. Can the others at least give me the name of the fundamental ethical principle which is of a breach? Which is of a breach? Yes. Chatura is good. Confidentiality. Confidentiality. So those are not the matters to be spoken about in open forums. It's not a forum even, it were in a golf club. A director discusses an impending share issue with colleagues at a golf club dinner. Those are not the matters to be discussed at a golf club. There are certain personal matters to be discussed at a golf club dinner. They can talk about their wives, and they can talk about their marriages, and they can talk about their divorces. And some people would have, spent a lot in their divorce settlements, all their hard-earned money would have drained off, and those are the matters to be discussed at the golf club dinner, not the share issues and sensitive information of the company should not be discussed in a golf club dinner. So it's a complete breach of what confidentiality. Next one, the finance director attempts to complete the company's taxation computations following the acquisitions of some foreign subsidiaries. What is of a complete breach? What is of a complete breach? I'm referring to fourth item. What is it? Others? Lasani has answered for all. What is it? Hurry up. Chatura says professional behavior. Others? I'm waiting for the answers, please. It is true enough competency. It's nothing but competency. So how does the competency matter? How does it matter? Soon after the acquisition, now the finance director, the CFO, is now completing the tax computation. Soon after the acquisition of foreign subsidiary companies. Is it just one tax computation? Attempts to complete the company's taxation compute following acquisition, some foreign subsidiaries, not just one. There are a couple of acquisitions. I mean, you would have acquired one company from India, one company from Middle East, another company from US, another company in Australia. So before you do that tax computations, you need to study the tax law in that particular jurisdictions. You can't do it over a night and you can't do it fraction of a second. So this man does it soon after the acquisition. So it's a question about as to how accurate your tax calculations will be. It's all about how competent are you in knowing all the taxes in all the jurisdictions in a day, on a day, or in a week, in a month. Can you study all the tax and do the tax computer? You can't do that. You can't do it. So he shows and clearly demonstrates the lack of what? He clearly demonstrates the lack of competency. You need to spend a couple of months. It may not be sometimes couple of months, maybe, a considerable time period to study, to learn the tax law in all the jurisdictions, and then to complete the tax computation. Okay, right. Fifth one. A financial accountant confirms that a report on his company is correct, even though the report omits to mention some important liabilities. What is it? It's an easy one. It's an easy one. So what is it? I want everyone to answer, please. It is integrity. A financial accountant confirms that a report on his company is correct, even though the report omits to mention some important liabilities. He himself knows that the report does not include, the report does not contain some important liabilities. Knowing very well that the report does not contain some important liabilities, he confirms that the financial statement, he confirms that the report is correct. So he is not straightforward. He is not fair in his dealings. It's a complete, it's a clear demonstration of lack of what? Integrity. Right. We are now moving on. Conflicts of interest and ethical threats. So this is another important area of the ethics, important area of ethics. Conflicts of interest. What do you mean by conflicts of interest? These are the areas which will compromise your professional judgment. And these are the matters or the concerns that will make you compromise your professional judgments. We'll explain that in detail. Okay, we'll explain that in detail. We'll start it with self-interest, self-review, advocacy, familiarity, and intimidation traits. So there are self-interest trait, there are self-review trait, so there's advocacy trait, there is familiarity trait, and there's intimidation trait. Why are they considered to be a trait? Because that will make you compromise your professional judgment. So what examples are there? So we will take one by one. Okay. Self-interest trait. So you have an interest on yourself. You want yourself to be healthy. You want yourself to be wealthy. You want yourself to prosper every day. You want yourself to progress in your career every day. And then if you think that you want to progress in your career every day, sometimes just to get that benefit, you will compromise your professional judgment. Since you love yourself, you will decide to, compromise your professional judgment. Since you want yourself to be wealthy, you will decide to compromise your professional judgment. Right. We'll take those examples. Financial interest. An accountant holds shares in a client company. Okay. Now you are the accountant of the company, and also you are a shareholder of the company. I mean, you are trading in the share market. You don't have a significant shareholding. It's only just that you have purchased a number of shares of the company while working as the accountant of the company. Now, why can there be a self-interest trait? We'll go through the example. Conflict between wanting a dividend from the shareholding and reporting the financial results. If the company correctly may want to hide liabilities or overstate assets to improve dividends. And while working as the accountant of the company, you are holding the shares of the company. Either you want a higher dividend or you want a higher capital gain. And for either purposes, for either requirements, you want to show a higher profit. How will you do that? You will try to manipulate. And you will try to hide liabilities. Knowing very well those are the liabilities of the company, you will try to keep those liabilities hidden under the carpets. And you will try to overstate the revenue. You will try to understate the expenditure. You compromise your professional judgment. Why? Because of your self-interest. So that is called self-interest trait. The fact of you loving yourself will make you compromise the professional judgment. So that is called the self-interest trait. I don't know how clear it was. Please just let me have a small feedback. Is it clear? Okay. Then financial interest. An auditor holds shares in a client company. Now you are working as the auditor, audit partner of an audit firm, and you are conducting the audit of the client. Also, you are holding the shares of that client company. You are an ACCA qualified accountant working as the partner of an audit firm, and also you are holding the shares of that client company. Conflict between wanting a dividend from the shareholding and providing an honest audit report on the entity. May want to hide errors found in the financial statements to avoid qualifying the audit report and potentially decreasing the dividend payment. So you want to issue a unqualified audit report. Also, you want a higher dividend or a capital gain from the client company. So these two extremes are conflicting with each other. So what happens is, even if you find some mistakes, errors, misleading informations in the financial statements, you will start turning your blind eyes and deaf ears. Why? On the basis of that, if you start qualifying the audit report, audit opinion, you will not be able to get a better dividend and you will not be able to get a higher capital gain. You just turn your blind eyes and you just turn your deaf ears. You just keep quiet as if you did not find anything, as if you did not come across anything. So why? Because you have the financial interest. Self-interest. What interest is that? Financial interest. You have the financial interest. You love yourself. You want yourself to be wealthy. So then what will compromise your professional judgment? Your self-interest. We call it self-interest trait. Self-interest trait. Okay, right. So what are the traits? It can be self-interest. It can be intimidation. It can be familiarity. It can be advocacy. It can be intimidation. So there are 5 altogether. There are 5. Next one. Close family members has an interest in the assurance client. Self-interest trait may decide not to qualify the audit report to ensure that the financial interest to the family member are not compromised. May also be an intimidation trait if an employee, the assurance client may threaten to sack the family member if a qualified audit report is produced. Now you need to look at it in 2 different perspectives. Now what I'm saying is this. You are working, we will not take you, we'll take someone, say Mr. Silva is working as the partner of an audit firm. and his wife is working as the CFO of the client company. So the husband is auditing the financial statements prepared by the wife. And then what happens is, the financial statements are all rubbish. There's nothing to be taken. They all are just, trash. Then even if the financial statements are not faithfully presented and that will contain some misleading information, the partner of the audit firm will not qualify the audit report, will not qualify the financial statements. Why? That will negatively reflect on his wife. That will negatively reflect on his wife. Just for the sake of safeguarding her job, he will decide to issue an unqualified audit report, audit opinion. Why? Because if not, they will lose their income. She will be losing her job. They will be losing their income. So they have their self-interest. And the partner's salary may not be enough just to survive. He wants another financial assistance from his wife. If the report will be qualified, she will be losing the job. And then they are losing the income. So then he will compromise his professional judgment. What is it? The audit report has to be qualified. But he does not do it by just for the sake of ensuring that the wife's job is not lost. So what is it? Self-interest in right? Intimidation. What do you mean by intimidation? And someone will threaten you. The threaten can be sometimes direct or it can be indirect. And your actions, your decisions on qualifying the audit report of the client will negatively affect to the wife and she will be losing the job. And it's like you sitting on a furnace. Why? You know how hard it is to survive even with the salary of your own salary and the wife's salary. You need to pay so much of bills. Loans are so much. And the bills are mounting up and the loans are mounting up. You are buried under the bills and the loans and how to settle. And how if the wife is also losing the job? And almost about, better to be committed suicide. So you are indirectly threatened to issue a better audit report and just to protect safeguard the job of the wife. You will be indirectly threatened to issue an unqualified audit report just for the sake of safeguarding the wife's jobs. So what is it? Kind of an intimidation threat. So what compromises your professional judgment? One is self-interest threat. What is the other one? Intimidation threat. You are threatened by someone. So I will take some examples for intimidation threats. And let me now I'll take some examples for intimidation threat. Listen. I took this example before and let me take this example again. Company A, and they have 100 million worth of investments. This is classified under fair value through OCI because it was not for trading purpose. And its fair value on the reporting date was 120 million. The managing director is calling you. He's coming little heavy on you. Not a request, kind of a command. And he says, I want this investment to be classified under fair value through profit and loss, not under fair value through OCI. And you are still on probation basis. You are the CFO. I know there are a lot of complaints against you. I was, keeping this matter for many days and many weeks. I was busy. And you cannot take your own decisions. Financial statements, just keep it for yourself. I don't care a shit. And you just keep it for yourself. You do what I asked you to do, and you can't be dominant here. You need to listen to me. If not, please bugger off, I will find someone else. So now he's not making a request. He says, whether you like or not, whether you can or can't, you need to reclassify the investment from fair value through OCI to fair value through profit and loss, and then so that we can recognize fair value changes to profit and loss. It's not kind of a request, it's kind of a threatening, forcing. So then the accountant or the CFO has to compromise his professional judgments. He knows by his profession, he has learned accounting standards. This cannot be reclassified. There are no, IFRS 9 has given rigorous restrictions on reclassification. Why people do that if not? The standard has already given the liberty and the freedom for them to keep it shifting around. People do it for their own use. The standards knows that. So the standards has put up all the possible hurdles to prevent the financial assets from being shifted around. You can't do it. So the accountant knows that they can't reclassify. But he has to compromise his professional judgment. Why, if not, there will be repercussions, there will be consequences. He will be losing the job. And the managing director will take the revenge. So that's going to be, an unpleasant working place. The managing director will set arms always to start firing and bombarding. You get caught. So then you will decide, okay, to reclassify. You compromise your professional judgment. Why? Because of intimidation. So that was intimidation threat. Okay. So once again, you are working as the accountant. Sorry. You are working as the accountant. And there will be a performance-based bonus for you. There's a performance-based bonus. The bonus will be based on the profit. You are the accountant, and your bonus will be based on the profit. And you will call all your juniors and tell them, I am the boss here. I am the one who takes decisions. You can't take decisions. Whether it is right or wrong, you must do what I ask you to write, what I ask you to do. And you can't instruct me. Who the hell are you to instruct me? I am a qualified accountant. You are still doing skill level exams. You are still doing skill level exams. I know a lot more than you. So you need to bring down impairment provisions by 15%. And you need to remove all financial assets impairment fully and cut down all the provisions by 50% and bring down the expenses accordingly. So increase profits. So what is it? You are threatening your juniors and subordinates to change them, to manipulate them so that you can increase the profits. The higher the profit, the higher the bonus. So what threat is that? They are your subordinates, your juniors are compromising the professional judgment due to what? Due to intimidation. Okay? Due to intimidation. Are they clear? Okay, so what threats have you did we complete discussing now? What threats? What threats did we complete discussing now? They were self-interest threat. They were Ayodhya. Okay. What threats did you complete discussing? We completed discussing self-interest threat. Thank you. Self-interest threat and intimidation threat. Intimidation threat. Now, intimidation threat can be sometimes direct, it can be indirect. I'll take some examples. This is an indirect threat. What is it? Now, I took this example also before. We are running these accountant firms. Accountant firms. Accountant firm. And we have a big client. And the client has not paid our bills for many years. It's accumulated to 10 million. And even we were not bothered to get it on time. Now only we start collecting. So the client says, look, we don't mind settling your bills at once, but we are running short of money. Already we have applied for a bank loan and the banks are waiting your audit report. If you mess it up, audit report, we will not get the bank loan, you will be losing your 10 million. You better decide. Now, even this audit firm is in dire need of money. They are badly needing money just to pay year-end bonuses to staff. So somehow or other they need money and they want to collect these outstanding bills from their clients. Now, since they are under financial pressure, this audit firm decided to issue an unqualified audit report, even though it contains all rubbish and trash. They decided to issue an unqualified audit report. Okay, so why? That is an intimidation threat. It's not direct, it's not straightforward, but it was indirect. It was indirect. Okay, so that was another example for what intimidation threat. It's another example for intimidation threat. Clear? Was it clear? Yes. Was it clear? Right. Then we are moving on. Familiarity threat. Familiarity threat. Now, say we learn in governance. We don't have governance here, but you learn governance in SBR. Now, in governance, UK, USA, we have Sarbanes-Oxley Act. I don't know whether we have done the subject. If you know, please answer. In Sri Lanka, we have the European Court. Sri Lankan law, the governance says that an auditor can conduct an audit only for how many years consecutively? I mean, if you are a partner of an audit firm, you can do the audit of a particular client consecutively for how many years? You can do that audit only for how many years? Now, Bill must be knowing it's only 7 years Lasarius, good. But the Sarbanes-Oxley Act in US is very rigorous in terms of term. It's not principle based. That is what it is. It's not principle based. What it is rule based. It is a law. You can't violate. If you violate, it's a criminal offense, maybe sometimes punishable offense. Sarbanes and Oxley Act says you need to keep changing the audit partner once in how many years time? Once in every. It's not 7 years, lesser than that. Once in every 5 years period. Once in every 5 years period. Why? If not, the audit partner will become familiar with the client. Now the audit partner will become part of the client place. Will become part of the client place. He will be bribed. He will be paid ransoms. He will be gifted. So the client will purchase the audit partner. So the audit partner will be someone like a dummy dancing to the tunes of the client place. So they will instruct and he will do. That Sarbanes and Oxley Act says you need to keep changing the audit partner once in every 5 years, time, not in 7 years. Then that is just to stop the audit partner from being familiar with the client. Now say the audit partner will be playing golf with the managing director of the client. So they haven't met to each other before. They are meeting now at the golf course. So they fell into a small chat. They introduced themselves to each other. And then only he got to know that so and so is our audit partner and so is the managing director of our client company. So they were glad that they met each other. By sitting under the shade of a tree, they fell into a small chat and it went on for hours and hours. Yeah, it is 7. It's not 7 years, 5 years or so. Okay, right. So then, now the managing director is now requesting a favor from the audit partner. What is it? Please, for the sake of our friendship, that was pampered for many years. Can you do me a favor? What is it? I know it is a difficult task, but I think you will do it just for the sake of safeguarding our friendship. Friendship is like old wine. It gets better as it grows old. Now, this time we have a lot of issues in the financial statements. I want some liabilities to be hid. I want some liabilities to be hidden. I want my balance sheet to be a fascinating balance sheet. I want my financial statements to be a rosy set of financial statements. Why? I want to impress the bank. I'm going to apply for a massive bank loan. And you are the crucial factor. You are the critical factor. Everything depends on your audit opinion. Please don't ignore my word. Please do it. You are my good friend. So he has to do that. What threat is that? Familiarity threat. Familiarity threat. Okay. Another example. Now I have taken some examples also before. The audit partner is auditing the financial statements of a client where his wife is working as the CFO. So let me repeat the story. The audit partner is auditing the financial statements of a client where his wife is working as the CFO. His wife is working as the CFO. Now the CFO will decide, might as well just to ignore. Why? She is my wife. I know she doesn't do anything bad. The financial statements must be perfect. Must be perfect. I need not to get into detailed investigations. I can, have a small sample check. It need not to be comprehensive. Why? I can trust her work. I can trust her work. Though I can't trust her word, I can trust her work. So what threat is that? Familiarity threat. Another example. So you will recruit many of your relatives into the finance department, very close relatives. Okay? They are your kith and kin. Blood is thicker than water. And you being the head in the finance department, the CFO, will decide not to supervise any of their work. You completely trust on them. You completely trust on their work. So there will be so many mistakes that will remain undiscovered, undetected. Why? You don't monitor them properly. You don't supervise them properly. So what threat is that? That is your familiarity threat. Familiarity. Okay, right. Then there will be self-review threat. Self-review. What are the examples? Now it happens very frequent. It happens very frequent. Say you are the audit partner of an accounting firm. You are the audit partner of the accounting firm. And you, before you started the work of the audit, you prepared the financial statements. You prepared the financial statement before you started the work of the audit. Are you auditing the financial statements prepared by you? No. Are you auditing your own financial statements? You are not. For what? And you prepared financial statements before the audit, and you are planning to audit it. Now what is the use? You did everything. Why should I, check myself? Why should I check the work done by myself? Why should I check my own work? No point, no use. So there is a chance of you ignoring all the checks. There's a chance of you ignoring all the investigations. There's a chance of you ignoring all investigations, and you will decide to have a small sample just for the check, and you will ignore all audit procedures. Why? It was you who did the accounts, and no point of auditing your own work. And that is what threat we call it, self-review threat. We call it self-review threat. Okay. Next is what? Next will be we have taken up self-interest threat, intimidation threat, familiarity threat, and finally we'll take advocacy threat. Advocacy threat. What do you mean by advocacy? You try to promote someone more than what you can. You try to promote someone more than what they deserve. A lot of examples can be taken from within the context of auditing. A lot of examples can be taken within the context of even politics. Okay. Now say you are a potential student of ACCA, and I am lecturing at PPIM. You are looking for a place to learn for ACCA from. And I will try to promote PPIM more than actually they are. I will try to over-exaggerate their services. I will try to over-exaggerate their quality. I will try to over-exaggerate their, services. But it's not the truth sometimes. I mean, I'm not talking about reality. They are good. What I'm saying is, as an example, if they are not actually good, if I try to over-exaggerate, overestimate, and then I'm promoting someone unnecessarily, it's true the fact that I'm lecturing there, but I should not do it, and I should explain the reality. I should explain everything as it is without hiding anything. So finally, when you come here and join, start learning, you will get to know the reality. I look fool. I get embarrassed in front of you. Why? What I explained, what I talked about PPIM is completely different from what you experience now. You experience by yourself. So there is a threat. What is it? Advocacy threat. Advocacy threat. Now, a company will be planning to go for a share issue. A company will be planning to go for a share issue. And we are supporting the share issue. We are providing some services. So by going beyond my capacity, I will try to over promote the share issuing company. But they are not actually that good. So I will try to over exaggerate their financials. I will try to over estimate their profit and the net assets. And I will try to, exaggerate everything in their statements. I will over explain, but they are not that good. They're not as good as, if someone goes through the financial statements, you will realize they are not as good as they are explained in the financial statements. So you will realize the reality. So what have I done? I have over promoted, over explained, overestimated, exaggerated their performances, financial status, and financial performances. Finally, I look fool, I get embarrassed. I have done something wrong. I have compromised my professional judgments for trying to over promote someone. So that is called what? Advocacy threat. Is that concept clear? So that's what some people fail to understand. Which one? Advocacy threat. Is it clear? Okay. So then we completed discussing 5 basic ethical principles. What are the 5 basic ethical principles? Integrity, objectivity, professional behavior, professional competency, and confidentiality. And then threats to ethical principles. What are the threats to ethical principles? Self-interest threat, self-review threat, advocacy threat, intimidation threat, and then familiarity. Okay, right. Now, safeguards are there. Safeguards seek to reduce or eliminate threats. They fall into 3 categories created by the profession. So there are some safeguards from the profession. So as I explained before, if your managing director will be intimidating you to reclassify investments from fair value through OCI to fair value through profit and loss, and you can't, work there, and you want some remedies, you want some solutions for the problems. What are the remedies available? What are the solutions available? Right within the profession, some remedies and solutions will be there. Education and training, including CPD requirements. continuous professional development, CPD. In every professional body, there will be CPD hours. In chartered, there will be CPD hours. And ACC, there will be CPD hours. In every profession, there will be CPD hours. Then if the managing director is an accountant, and if he's coming from ACC or CA, you can get him to take part in seminars, awareness programs, so that he can keep updated himself and he knows the latest developments in financial reporting. For an example, IAS 1 presentation of financial statements is no longer available. It's going to be replaced by IFRS 18, but it's becoming effective on 1st January 2027. You need not to worry, because by that time you will be qualified. So there will be education and training, including CPD requirements. Setting of corporate governance regulations and professional standards. If the managing director will be intimidating you to reclassify, you can take it to audit committee. Bring it to the notice of audit committee. And let them to handle the matter. Let them to handle the matter. Monitoring of professional work, including disciplinary proceedings. And there can be whistleblowers. You can, bring the matter to whistleblowers. And the managing director will be asking you to break the requirements of accounting standards, you will get into problem. Your membership will get cancelled. And the professional body ACCA will call you for disciplinary actions in front of a committee. Okay, so there will be consequences. Work environment, there are many examples which include internal control systems, review procedures, disciplinary procedures, organizational codes of ethics, separate review and reporting for key engagements. Individual, these include complying with professional standards, maintaining records of contentious issues, mentoring, contacting professional bodies with queries. So that is what we need to talk about ethics in our syllabus. Okay, and this part is almost connected almost everywhere. In every exhibit in your past papers, they sometimes connect it to ethical issues. So if you know ethics and the threats and the safeguards, answering the question is not hard. This is, and there will be a separate question from ethics for like 10 marks, and you can easily get 10 marks. It's not so hard. It's not as hard as you doing a control questions, maybe sometimes a control cash flow or foreign subsidiary. Please go through this document again, and I have given you enough examples to go through. I just thought of doing some questions today, but I forgot to bring my revision camera. Very sorry, but from next week onwards, we are starting the class on time, and it will continue until 10 o'clock. I will finish the class for today, but from next week onwards, we will continue until 10 o'clock, starting from 6. I will not be able to start sharp by 6. I finish a class elsewhere and come. It will take about 10 minutes for me to come, but doesn't matter. From next week onwards, we will continue until 10 o'clock. Be ready, and we'll discuss as many questions as possible. And for theory students, we are meeting up tomorrow. And then good night. Thanks for joining the revision class. We will meet up next Saturday at 6 for 4-hour sessions, and we'll discuss the questions. Thank you.